how did the deal for the Hong Kong exchange to license the MSCI indexes come about?
So MSCI obviously have an exchange relationship per region, if you will. So that's ICE and for the US and Eurex in Europe, and for several decades it's been SGX in Asia. The renewal for that deal was imminent, and it gave MSCI the chance to consider its sort of optimization in the region. And obviously we wanted to have a partnership with MSCI. So we went and discussed probably on three key pillars. One being the ecosystem for Hong Kong. And what I mean by that is really the product ecosystem. So that's the futures industry here, where we have done quite well on HSI, HSCI over the last while. I think 50% increase in that ADV over the last 5 years or so. And then into the structured products, which are off the back of our options ecosystem. The second key thing is our geographic opportunity there, which is our proximity to China. So I think together with MSCI, we can start to think about how do we take these into the mainland. And I think even in our own market here today, we've seen the mainland participation increase dramatically. I think in blink of an eye, it was sort of went from 3% to 18% to 20%. So when you think about that coming into the MSCI suite, then our geographical proximity is quite fortunate. And then I think thirdly, it's the cash market. I think Hong Kong's always been quite famous as a cash market, but how do you relate that to a series of futures contracts? And that's really down to the fact that futures like to trade near the underlying. And even when you look at the EM indexes, particularly contracts like China Free, most of the underlying, like the top 10 stocks, are all actually listed in Hong Kong. So if you want to sort of do your event-driven risk management, then you're going to have the futures sitting side by side with that. So it's really those three key pillars: the product ecosystem, the geographic proximity, and leveraging on the cash market. So we're really pleased with the deal. It's a very long-term deal, so we look forward to the growth of that.
So what is your target audience for these indices?
I think mine obviously goes first and foremost to what I might call the MSCI loyalists, if you will, the trillions of dollars that track MSCI indexes, and the rationales for tracking is clearly the superior performance of MSCI indices down to their methodology. So that's sort of the first segment that you look to work alongside, and we've seen that movement already. The second ecosystem is really what do you call the banks, the Delta One traders, for example, that are looking to manage risk for client facilitation over a long period of time. Certain products within the ecosystem, within the MSCI suite, also have attraction of retail investors, and obviously Hong Kong's got a significant amount of retail participation in our market, as well as the Chinese do as well. So one day we can see those chemical reactions coming in as well. And when you get that sort of passive plus active plus bank flow together with some retail flow, you'll probably then attract the quantitative traders and the prop traders, and we've already seen those coming in. The Taiwanese index is one particular one that is appealing. The TAMSKI in Hong Kong is very highly correlated to the onshore, if you will, Taiwan National Index. And so when the arbitrage opportunities come and play together with the sort of actors, if you will, in the product suite, then you'll see those chemical reactions, and it'll grow up and look very, very similar to what we've experienced already in HSI, HSCI, etc.
Why are these indices important to global investors?
If you look at any MSCI index, the methodology is very aligned to outperformance. So I think if you look at it compared to any other index in the world. There's a reason it's got more money tracking it than any other index, and it's really down to that outperformance. So as I explained, I think you go through those phases of migration clients, if you will, that have been holding the indexes in Singapore for many years. And you work hand in hand with them to easily migrate them into Hong Kong. It's not a terribly difficult trade to do. Just a little bit of hand holding is required. Subsequent to that, once that's all bedded in, then you do look to expand where can you expand the ecosystem of actors and players into it. And it's probably two key parts there. I think as I mentioned already, the Chinese participation. I do see a day coming when Chinese investors do want to go global. We certainly want to be a mousetrap for that, if you will, and not only have the emerging market indexes here for them to enjoy, but also perhaps they might want some global exposure here. So there's certainly a clear strategy there. The second set of actors that I think has been somewhat missing from MSCI indexes around the world are the option orientated players. So I think Hong Kong, we can sometimes do over 1 million options contracts a day when you add up the index options and the single stock options. So they generally haven't played in the MSCI suite. So once we sort of bedded down on the futures, we'll certainly launch the options, and then there's a whole host of new players that can come in and play between the options and the futures. So we have what are known as CBBCs and warrants here in Hong Kong. And in terms of exchange traded structured products, it's actually the largest in the world. And then that's how really the cash, the future, the options into the structured products, and I'll also include in their ETFs. When all of that plays in together and leverages Hong Kong strengths, I think there'll be new paradigms for the MSCI suite.
Are you seeing some new brokers come into Hong Kong as a result of this deal?
We've had quite a lot of interest from that area, and the onboarding of those brokers is occurring at the moment. I can't name names, but you'll understand they're generally very large when they come from Chicago. So we look forward to them. Then coming not just for the MSCI suite, mind you, there's also already an attractive and compelling value proposition here in Hong Kong for them to come anyway. This just sort of entices them to come a bit faster. And then I think also we've seen quite a number actually of what I'd call that sort of regional broker participation coming in that perhaps we hadn't seen before, and particularly from Singapore actually, and further afield. Well, couple from Japan, and increasingly, as you'd imagine, the Taiwanese brokers that have played, particularly in MSCI Taiwan, for a long time. Love the TAMSCI, don't want to let it go, and so they were actually the first guys to connect with us on the TAMSCI. So yeah, we're exciting about the current ecosystem, and really looking forward to all the new players coming. It's I can tell you, it's a very busy time.
How is Hong Kong supporting these indices? Are you putting in a market maker program? Is there a big marketing push, education push? What are you doing?
I think we've always had quite a strong principle on how we grow our products in Hong Kong. And the government's always been with us side by side on that. It's we're not really a big fan of paying huge amounts of money to people to make a trading book look pretty, and to see these artificial sort of volumes that go up there. We'll certainly do market maker programs. That's fine, but we won't go any further. We're not going to pay for open interest. We're not going to pay to have this huge inflated ADV there. We think it's a very short-term type of thing. In the long term, you rely on natural liquidity that marries up with the outperformance of the product. So we'll rely very heavily on that. We're cognizant that might present some challenges in the short term, but this, as I said at the very beginning, this is a very long-term deal with us, and so we want that to grow naturally and side by side with MSCI.
So are you doing anything special in education or marketing?
We're certainly targeting, or do many one-on-one webinars, if you will, education sessions with all of the big banks. We generally use the banks as our distribution network. They know their clients, they know what they're looking for, and we sort of aggregate that feedback and then distribute it back out. Massively leveraging the banks, and we're so grateful for their support on that. It's not to say that when we obviously understand who the largest open interest holders are in terms of the buy side, and we will sort of target into that level as well. I think later on, though, I'm never sure it's going to be sort of splashed on the side of a bus or on a billboard somewhere, but it is encouraging to see the amount of retail that's coming in, and I think we'll need to think about how we sort of tackle our marketing towards that. But huge amounts of education, huge amounts of not sleepless nights, but late nights with your colleagues in America talking about these, where there's obviously quite a big MSCI franchise and so MSCI loyalists, and we're certainly side by side with that.
What is the difference between the Hong Kong MSCI versus how SGX offered them, or the indices that they're offering now as a replacement, the FTSE Russells?
I think again, we go back to, why did MSCI choose Hong Kong as their partner for the long term? And again, that comes down to the proximity to China, the underlying cash market that ultimately will be leveraged and later on, and thirdly, the product ecosystem. These are things that I'll just say are massive strengths of Hong Kong. I'm not trying to disparage what Singapore has. It's just it's certainly a strength of ours and a proven track record that we have with that. The commenting on what Singapore want to do with their product suite, I'll leave that to them. I just still make the point that I think over the long term, the proof's in the pudding. Hopefully that resonates with Americans as well as my home of England. Proof in the pudding, meaning that the performance of the indexes, the amount of money that tracks it, I think is pretty much all you need to know.
Is there anything tricky about the transition from Singapore to Hong Kong in terms of moving the open interest?
No, I think it's said earlier, it's a pretty simple trade. So, you just sort of go and allow if you wish, just go and allow the Singapore leg to expire and taken outright into the next month in Hong Kong. You could maybe do that as a hedge trade, if you will, and then use a spread contract. Say short Singapore, long Hong Kong, spread into the next month. I think that's just a very common trade that most people would do, and we've seen that being very, very prevalent. The only sort of wrinkle there, I think, is that caught a lot of people by surprise, is that Singapore decided to terminate the TAM scheme earlier than was contracted to do so. So I think most of the market was preparing for a February 2021 to be the sort of cessation of new contracts of MSCI on Singapore. Singapore decided to accelerate that. And so now you've got this sort of mad rush to get those migrations. So it's not a terrible thing. I think the intensity that we've of engagement we've had from the clients is a good thing, actually. I think the results have been very, very pleasing. I was thinking about it if in a way that, if someone told me that I've got to move apartments in 6 months from now, it's not like I move tomorrow. I probably leave it until a month before I actually have to move apartment. So I think the market was feeling like that. It's just the landlords come in and said, actually, no, you've got to move in a couple of days. And then you actually get a bit panicky and a bit very engaged with the exchange to find out how. So that's where we're at. So the results are really encouraging, massive trades coming in. So open interest going in the right way. And I'll just make that final point there. It's all natural. There's nothing paid for here. It's coming because it wants to be here.